Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Mr. Daniel Yu, Global Strategist at Yuanta Securities. Mr. Yu, good afternoon. Thanks for coming on.
Good afternoon.
Well, the U.S. market was closed on Monday for Independence Day. Other markets were higher for the most part overnight. The exception in Europe was Germany. In Asia today, mostly higher as well, with the exception of Shanghai. What's the story in the global markets?
Yes, if you look at the U.S. market last week, it did some correction where the Dow fell by about 1.3%, the S&P 500 lost about 2.2%, and also NASDAQ was down by about 4.1%. But if you look at the futures market right now, it is up by somewhere between 0.5 to 0.8%, depending on the index. I think that there are quite a bit of uncertainty right now in regards to what's happening to economic recession. A lot of people are concerned about the economic recession, where the first quarter economic growth rate was negative Q on Q, and some people are expecting that the second quarter will be also a negative number. Maybe if that's the case, then U.S. economy is already in a recession. That caused the last week's corrections. However, though, if we look into right now, the market seems to be recovering from the lows because there's a possibility that the inflation numbers are coming down quite aggressively. Of course, oil price still remains very high, but nevertheless, the core PC inflation remains to be fairly reasonably low, and all that means is that the economy might be having a very short-term recession rather than a long-term recession. We need to watch and see how the inflation number plays out next week, and what the Fed will do in regards to the rate hike. Right now, people are expecting 0.75% rate hike in July 27th. Once that's done, the rate of rise will be decreasing, and if that's the case, the liquidity condition will be improving, and therefore people are saying that maybe the U.S. market might be in a position to recover in the second half of this year.
Well, Korean stocks today had a bounce back, apparently on some hope for a truce in the war in Ukraine. Other factors, of course, too. Big names higher for the most part, but not car makers. They've been struggling with concern about a slowdown in demand overseas. Foreigners were buying today, though the exchange rate is still at 1,300. Tell us about the domestic market.
Yes, if you look at the Kospi today, it's strongly recovered by 1.8%, and also Kosdaq is up by 3.9%. It's quite a bit of recovery today. But if you look at the past several days, Korean market's been keep going down. The Kospi was breaking the record lows in the last a few years period. And it did go down to as low as below 2,300 one time. So there's quite a bit of uncertainty regarding the Korean market. If you look at the valuation-wise, the price to book has fallen to 0.8 times book in a 1 year forward. P multiple falling to 10 times level. Even such a cheap valuation, people are uncertain about what's happening to the inflation number, and also what's happening to the economic growth rate. Overall, people are concerned that the U.S. economy falling into recession and China having some kind of a bit of a negative relationship for the time being might cause the Korea to go into a fairly sizable recession. That's the reason why the market has been continued to be weak. However, though, if you look at the overall export numbers as well as the overall nominal growth rate of GDP, Korea seems to be fairly in a reasonably good position. And as I said, the valuation seems to be too cheap. And therefore, if looking into the second half of this year, Kospi might be in a position to recover at least what has fallen if it has fallen by more than 25%, then maybe the market can go up by another from that bottom around half of what has gone down. So about at least around 20 to 30% recovery. We're looking into that based on the valuation being cheap. But of course, we have to wait and see how the economic recession plays come to play. But for the time being, I think the market looks quite reasonably okay.
Well, a big story today, of course, inflation coming in at 6% here in Korea last month. A year ago, we were talking about inflation at 1 to 2%. The government was even concerned at one point that inflation was too low. What's happening with inflation and what kind of effects are we going to see?
Yes, I think that if we are looking at the inflation numbers, other than China, most of the other economies are suffering from the inflation. The consumer price index for South Korea, as you said, was up by about 6% year on year for June. And that number actually continued to go, showing a rising trend. If you look at the May number, it was up by 5.4%. And the number itself coming in at 6% is above expectations. Clearly, the uncertainty about inflation pressures for other economies, including Korea, is happening. If you look at the Europe, inflation numbers are coming in at 8.6%. As you can look at the U.S. market, it is still at 8.6%. All in all, the inflation number seems to be very strong right now. However, though, we think that the possibility inflation pressure might be falling in the future because if you look at the raw material cost, a lot of the raw materials are showing a significant decline from the peak of the prices in the past about a month or so. We did see copper prices and most of the metal prices, agricultural prices, all falling by somewhere between 20 to 30% from its peak. So if that's the case, then Korea might be relatively doing better in the future compared to this month. However, though, Korea's dependency on oil is extremely high, and still the oil price remains to be very high. It is probably the only one commodity that is not showing a major correction from its peak. The peak was around $130. Right now it's about $111, $12. So it has fallen by around 15%. But nevertheless, it seems to be extremely high and causing the inflation pressure in regards to energy for Korea to be very strong. We'll wait and see how things plays out, but at least we have seen the peak of the inflation numbers for this month, and maybe gradually we'll see prices falling as the oil prices as well as other raw material prices are falling as we see global case.
Got it. All right, Mr. Yu, we'll leave it there for today and check in with you again later in the week. Thanks so much for sharing your time with us today. We appreciate it.
Thank you very much.